Hi, I'm Ric Ronge from Adansonia Capital, and this is our Global Opportunities Portfolio Update. Our disclaimer, which I'll take as read. So this is a slide of the portfolio's performance to the end of July 2022, and we're very pleased with the performance in July in both an absolute and relative sense versus the market. August also is shaping up to be a very strong month, although we haven't actually finished the month just quite yet. I think it's worth noting that tactically over July, we basically employed a lot of cash that we had in the portfolio because the market was getting very oversold, and we reduced our cash levels from around 8% to 2%. Although essentially the market rebounded a lot stronger or a lot quicker than what we expected from its mid-June lows, roughly about 20%. So effectively, we've now reversed that position, locked in profits, and essentially raised cash. So we're carrying a fair bit of cash at the moment, simply because the market has rallied on weaker than expected inflation prints, and also I guess an expectation that the central banks would become a little bit more dovish on the back of some slowing growth numbers or economic growth numbers. However, our view is that central banks will continue to remain hawkish, and that essentially interest rates will continue to normalize. And also, given our theme or our philosophy, I should say, that earnings growth drives share prices, we believe that the consensus earnings forecast for the second half of this year, Q3 and Q4, are still way too high. And there's going to be some downgrades there, which will basically weigh on the market in the near term. So we've got plenty of dry powder to take advantage of any opportunities that basically present themselves in the near future. Before I sign off, it's a very short meeting. Before I sign off, I just want to talk about Shell PLC, or Royal Dutch Shell, as it used to be called. It's our latest portfolio inclusion. It's a globally integrated, or it's a global integrated oil company, although essentially being domiciled in Europe. And Europe obviously was the first country to slow on the back of what's happened in Ukraine. It's actually underperformed its peers that are headquartered in the US. So rising oil and gas prices are not fully reflected in Shell's share price, and you can see here on the slide that it has some very attractive valuation numbers, trading on a PE of 5 times EV/EBITDA, of 3 times for calendar 2023, dividend yield of 4%, and it's currently generating a free cash flow yield of around 20%. The investment theme behind Shell is a very simple one. It's all about the decarbonisation of energy, and effectively 88% of global emissions are covered by countries that have a net zero emissions target. And in this, gas and LNG are going to play an important part in basically satisfying those targets. So essentially, with respect to gas, first and foremost, it will play a large role in switching away from coal and other fossil fuels as renewables start to take a larger stake in a growing market. So effectively, gas will be the transition energy towards something that's more sustainable. But in saying that, in Asia in particular, domestic gas reserves are falling. So this is where LNG is going to come to the fore. Further to that also is that looking at renewables and the reliance on renewables, or expected reliance on renewables, the fact of the matter is, with solar and with wind and with hydro, if the sun's not shining, and if the wind's not blowing, and if the rain's not falling, and that's particularly what's happening at the moment in China with 3 gorges, the fact of the matter is that renewables aren't basically producing power, or aren't producing power in a reliable manner. And effectively, gas or LNG will essentially be the fallback source of energy to basically counter the intermittency of renewables. So essentially, as we've mentioned here in the slide, Shell is the world's largest trader of LNG, and we've got a very strong outlook for For LNG, where effectively studies are showing that it's expected to grow. The market's expected to grow by around 90% to 2040 to around 700 million tonnes. And Shell will be a key participant in all of that. On top of that too, one point of differentiation in Shell versus its global peers is that in investing in the future, or transitioning of the company in the future, it has a 2050 net zero emissions target, like a lot of its companies, like a lot of its peers, I should say. It's investing more in low carbon fuels, in hydrogen and in biofuels, as opposed to renewables. And the fact is that renewables are a lower margin business than essentially what you're currently seeing just in traditional oil and gas. So this is a point of differentiation that we very much like for Shell. That effectively, you know, it's got a view more on generating sources of energy that are lower carbon, that effectively are just pure renewables. The outlook for Shell's earnings also are supported by the fact that it's undergoing a strong buyback, so it's making good use of the current cash flow that it's enjoying from strong oil and gas prices. Shell has just completed an $8.5 billion buyback of its shares, and it's just announced a further $6 billion buyback, and that will all work to support EPS. And effectively, the earnings outlook for Shell is a lot more robust than many of the other companies in its space. Also, from the prospect of an Australian investor, the $A is at a 5-year high versus the pound, at least when it was when we opened this position. So we basically got good traction, or good, I guess, a good currency translation in buying shares that are listed on the UK Stock Exchange by using a relatively strong Australian dollar versus the pound. So adding it all up, we value share at around $29 or £29 a share. We opened the position when the stock was around 21, 22. It's currently trading around £23 a share. So it has roughly about 26% upside, and we're very happy with the outlook for this stock. It's also a good diversifier in our portfolio in terms of being a pound exposure and obviously just being in a different industry. So look, that's the end of our update. Again, thank you for your interest. Thank you for your support. Please, if you have any questions, feel free to contact either Tony or myself. Our contact details are at the front of the slide, or obviously on the Shartru website. Thank you, and I will see you all in Cairns in a few weeks.